I'm a practicing CPA and I work with individuals and small or mid-sized businesses to help them pay the least amount of tax as possible while keeping them out of jail. So today I wanted to talk about an article that I read, or it was a video that came up on YouTube. Spend quite a bit of time at least listening to things on YouTube. So something came up about the producer Swizz Beatz. Those that are familiar with the rap game, the originator, producer, the Rough Riders. Guess he's went on and spun off to different ventures. I think I read about him doing some things in the art world, the art space. But yeah, he's done a couple of things in the entertainment industry over the course of time. The celebrity, so to speak, married to Alicia Keys, I believe. So there was an article about a tax lien being filed for him, and it was about $5.7 million, if memory serves me correct. I'll put a clip of the article here. So it said that he owed 5.7, and actually I saw a YouTube video about someone saying, oh, well, he owes these taxes, and he and Alicia Keys must be going broke because there is a tax lien. And they're in trouble and they're broke. And I'll say this from a third party perspective. I don't have any contact with him. I don't know anything that's going on with his situation. But the point that I wanted to raise is that when a tax lien is filed, there can be a number of circumstances behind a tax lien being filed. And it's really not the end of the world if you have a tax lien filed against you and your name. It doesn't necessarily indicate that you're going broke. Just looking at these articles, and I guess it's a little bit sensationalized as far as, he is a celebrity and you see these amounts that are being filed because liens are public record. So that's how these articles and these things get posted. When you owe the IRS money and over a certain amount, they file a lien to let creditors know that, hey, you owe these back taxes. But there's a little more to it than that. It's not as soon as you owe it, you get a lien that's filed against you. So I guess the point that I'm looking to make is that it's a tool that can be used, or it's a part of, even with tax resolution, it's a tool that's used. I shouldn't say it's used because they're looking to get their money, but it's all a part of tax resolution with the lien. It doesn't necessarily mean the end of the world, well, the sky's falling or you're going broke if you have a lien that's filed against you. It's a lot of hype when you see folks say, oh, there's a lien and they owe these taxes. You hear all these things. But to just give you a little bit of truth behind it, may not necessarily seem as bad as it seems. So one thing to point out is that the IRS can file a lien against you if you owe ones. Now, in this case, they put the amount, and it's pretty high, I guess, for normal folks. But with high net worth individuals, when I've worked with a few, this can be commonplace. And there's a number of ways to how this can come about. This could be an amount that was in dispute. And then they list all sorts of back taxes, prior years that he had owed these taxes. He's had tax troubles before. And a lot of times when you see this, a lot of the disputes that take place. So what can happen is that most of the celebrities that you see, you hear these dollar amounts, they have some sort of self-employment action going on where they have revenues, expenses. And I also know in case of Swizz Beatz, I believe I read some things, he does some things in arts. So in the art space, he might have a collection, that may be worth a ton of money. You buy art, you sell art. But the point being is it's not as if these folks have W-2s and it's pretty cut and dry as far as what tax bill that they owe. But what tends to happen in a lot of these celebrity cases is that you file your taxes, you have some sort of self-employment or business capacity, and you have a number of expenses that you deduct. Then because they're high net worth, their tax returns tend to get a lot of more scrutiny than your average person or even your person making a couple $100,000, right? So, when you are in the space that say Swizz Beatz and these celebrities are in, those returns get a lot more scrutinized. Why? Because you have experts and they're being rather aggressive to do what I look to do, right? Pay the least amount of taxes possible while to stay out of jail. Well, when you're in their brackets, when you're making that kind of money, those returns get scrutinized a lot more. I believe there's a special department just to look at those returns. Why? Because if they decide to dispute something, the returns on that can be a lot for the IRS. So the point that I'm just making is that because those returns get scrutinized more, it could be as simple as expenses that get disputed, right? I mean, I've seen that with a number of my clients where you'll file your return, they'll come back and they'll dispute and they'll say, look, we see that you deducted, in this case, $2.5 million or something like that. We don't think that's an expense. So we are going to remove those deductions, right? And after we remove all of these deductions, here is your new bill, right? And that new bill may be, $1 million, million plus dollars, or whatever the case may be. Now, being that person's representative, well, whoever prepared or put together that return, they're obviously going to dispute that, because otherwise you wouldn't have bothered to put it in there. And no one wants to go back to a client and say, yeah, we messed up and you owe X amount of dollars. So it's usually something that can be disputed. So whoever prepared that return is more than likely going to go and dispute those items with the IRS. And so you talk to whoever the assigned agent is, correspond with them. Hey, look, we need substantiation of X, Y, Z. The IRS says, okay, we'll come back and provide that. Okay, once you may provide sufficient, or you may not provide sufficient amount. In an instance where, let's say they didn't provide a sufficient amount, the ruling is, hey, look, our ruling stands. We are not including those expenditures. So here is your bill. Okay. It happens. You look to be aggressive. Want a tax advisor that they want to be aggressive. It might not have worked out. Fine. We owe this bill. Okay. We're not prepared to pay the full thing. Yeah, that doesn't necessarily mean you're broke. It's just like from a financial planning standpoint and from a cash flow standpoint, it may not make sense to pay all of that right now. So you know what? We'll wait. We'll take the interest. We'll wait, and we'll pay at a later date, or we'll pay in this payment plan. It might be like, look, I don't want to liquidate any portfolio or free up the cash to pay it. That doesn't necessarily mean that they may not have it. It may not make the most sense for them to pay at that time. Okay, fine. We'll enter into a payment plan. Well, if you get into a payment plan with those kind of figures, the IRS files a lien. So my point here is that when a lien is filed, I'm assuming that going back with Swizz Beatz, and when you see these amounts with these different celebrities, they have advisors, they have representatives. This is not something that they're doing on their own. And a lot of times a lien may just be a part of the process to get it handled, but liens are public record. So that's the first thing. When you see lien or hear lien, you're thinking, oh, well, the person must be going broke. So, and another note, because he is married to Alicia Keys, everybody was looking to say, oh, well, does Alicia Keys have the lien too? Because they're married. And she was not. It was just him. So chances are, if they are legally married, I don't really know what their situation is, but if they are legally married, there is a chance that if they are married, that they're just filing separately, probably to avoid things like this, just to keep things separate. Because normally when you are married, 9 times out of 10 for folks that aren't necessarily ultra high net worth, it usually makes sense to file a joint return, and you'll have a good amount of tax savings doing so. But once you reach their levels and the kind of money that I'm sure that Swizz and Alicia are making, at least independently on their own, between file and joint, file and separate, I'm assuming that the differences are minimal, and the savings that might be there, it's probably so small for them at this point, because I'm assuming that they're both in the top bracket, whether they file joint or together. So the savings as far as filing joint are rather diminished. So for situations like this, I can see how it may make sense for folks to file separately. And that way, if these disputes happen, it's just on that one taxpayer and not on both. So I'm sure that's why you really just see him and not the both. But this way here is that even when I'm dealing with clients and liens and whatever come up, it's not necessarily something that means that the person is gone. The IRS will slap a lien on. Even if you're in a compliant payment plan, you can have a lien on you within a compliant payment plan. That doesn't mean they're about to come and take all of your stuff. You can be in a payment plan, making all of your payments on time, but you're in a long-term payment plan and you owe more than $50,000, you're more than likely going to get a lien placed on you. You can pay over time. And when you enter into these payment plans, sometimes take years to pay off. So you can have a lien on your record and still be making all your payments perfectly fine. So yeah, so the takeaway here being that you shouldn't look at liens as scary as you think it might be, because most folks think that you have a lien, they're going to come and take your stuff any day. Now, there are scenarios where that can happen, but as long as you're staying on top of things and being responsive and working with representatives who work with IRS to get it taken care of, you should be okay. But there are extremes where, yes, there are liens, and if you continue to ignore it, or you decide to set up a payment plan and you blow the plan and you don't make any other arrangements, then yeah, it can get extreme. But the point being is that just seeing a lien doesn't mean you're at the end of your rope. All right. So hopefully this was helpful. And if you have any questions about this topic or any other tax or accounting related issue, any sorts of tax resolution that you may need to get sorted out with IRS or any other state, please reach out. I'm happy to help.